Hello traders, welcome back to the channel. This is Jonah with Trading the Charts Pro, and guys, based on the thumbnail you can see we're going to talk about 3 EV stocks and why I think it's a good idea to start buying here. And as we buy, just be patient, but the main reason for this is the chart. So the chart supports the idea that I have behind these trades. But before I jump into those stocks, we want to take a quick look at the S&P 500 to see what the S&P 500 is telling us, because as a short-term trader, the direction of the market is super critical in terms of our timing of execution. All right, so we have the S&P 500 chart pulled up right here, and guys, we are still pretty much rolling over. However, when we look at the chart, we can see that the exponential 50 or the 50 EMA is pretty much the critical level that we're watching. And as price pulls down to this level, we see where it's somewhat like halting. So we haven't sliced through this level as yet to show us that things is going to progress and go a lot lower. However, I still want to be ready in the event that those levels start to break down. I want to know ahead of time where can this market go to the downside. If it's a short-term retracement, what are the levels that I should be getting ready to start buying again? The main tool that I technically use to find retracement levels is going to be your Fibonacci retracement tool. All right, so because the market has trended for a pretty good period of time, what I want to do is identify where did the trend actually start. And I can see back down here in November, this is where the entire move started. So I take my Fibonacci retracement from this point, map it all the way to the top here where the market literally stopped and started to roll over. And then I got my measurements. My 31.8 retracement is right at this level, at the 50x min, at the 200 SMA, simple moving average. And then my 50% retracement is a little bit below that, and then the 61.8 retracement level is a lot closer to where the market actually break out of this horizontal move and started running high. All right, so if we start to see where this market breaks down significantly from where it's currently sitting at, these are the levels that we have to watch to see, hey, how deep is this thing going to go? But as it is right now, things are still slowing down or just holding steady. So nothing to be too scared or wanting to run away for as yet. Okay, so with that being said, let's start looking at these 3 stocks. And the first one is NEO. All right, guys, why do I like NEO? All right, the first reason why I like NEO is based on what I'm seeing on the weekly chart. So on the weekly chart, the concept of this trade idea is that NEO has run up on the weekly into a short-term ascending triangular pattern. Now the concept with an ascending triangular pattern, price runs up similar to a pennant, bull pennant, and then price breakout, and we get a continuation to the upside. Right, that's how I'm looking at it the first way. Second way is we can look and say, hey, maybe NEO has just run into what is a short-term channel. And if it's just a channel, we're pretty much at the bottom of the channel right now, where I feel comfortable to start a position with my risk level if we break down below the support that the price action has been holding for around 3 months, right? And if it's just a channel, our upside target is going to be the $64 level. So from 37 to 64, that's almost 16, 17, 18 points to the upside. All right, that's how I'm looking at this right now. I like it right here just based on what the weekly chart is telling me. I like the concept, and I'm going to show you a chart that has played out this very same pattern, and that pattern gives me more confidence that this is what I'm looking to see playing out very soon in NEO. All right, if we come over to the daily chart and look, we can see, guys, right inside this 31, 32, 33 dollar level is really the low risk level of this support. The high side 67 on the way up to the upside, 57 on the low side. All right, so this is the region where we're looking to exit this position when price gets back up there. You may be looking at it and say, well, price is below the 200 SMA. Yeah, that's a very critical point. Yes, but typically what I've found, when price is moving on a horizontal basis, you will see price oscillate above and below the 200 SMA moving average. So I kind of discount the fact that it's below the 200 SMA while the price action is channeling, because in this situation we have a very clear support level and we have a very clear resistance level, and as long as price continue to oscillate from those 2 points, point B to point A, point A to point B, then we will focus on that and discount what the moving averages are telling us, because in a situation like that, moving averages only pretty much strong or help you while the market is trending. So when the price is just moving sideways, they don't help you much. All right, so let's move on over to the second stock that I really like, and this is Xpev. All right, now we're gonna start from top down, looking at the weekly chart. Guys, when we look at this, it's the same concept, guys. Price run up and run into a very big triangular pattern. At least for this one, this is a symmetrical triangular pattern, right, where price is typically making, you know, lower highs, but it's also making higher lows. So when you see that price is just pumping itself into a very tight wedge that has the ability to break out to the upside bullish, and it also has the ability to break down to the downside bearish, but it's holding very close to the resistance side of the triangular pattern, which tells me we're just pretty much building momentum to practically break out to the upside. Now the risk as far as Xpev goes, we can also anticipate that if this price action gets weak, it can come back down into this uptrending channel level right here. So that means that Xpev could eventually fall back somewhere down below between $38 and $32, and nothing would actually be wrong with the actual stock. Nothing would be wrong with the pattern. The only time something would be ideally wrong is if we see this thing start to break down completely below this level. Then we would have to say, well, maybe this thing is coming back down to its original support level, which that is around $18. We don't want to buy here and hold all the way to 18, so we have to identify what is our risk level here. When are we looking to get out if this thing goes against what our idea for the trade is? So as it is right now, $34, if it completely break down out of this triangle to the downside, then I would look to you know, take a quick loss right here and reevaluate later on. But I'm optimistic that there is a potential almost 20-point upside for Xpev. So I'm looking to see this thing break out, come up to the $64 level. And guys, these two trades are not something that will necessarily play out in the next week or two. It may be about a month that I may be sitting in both of these trades, but I like the concept. I like the setup. If I go back and look at Xpev on the daily chart, we can see clearly, guys, that, you know, this thing run up very nice and then it came down with a wave 5 correction to the downside, and from here now it's no longer really moving in waves. it's pattern time, right? So very long pull to the upside, and from there we run into this wedge pattern or pennant, which typically is looking to break out and push us back to the upside. So my first target level for this is around $58. My second target is to see this thing comes back and test the all-time highs. What's the risk level? If I see this thing completely break down below $34, it means that I was wrong about this trade and I need to cut the loss and reevaluate when this thing gets back to around $23. That is a very strong support level. All right, so this is how I'm looking at XPEV. Third one that I'm looking at also is LI, right? LI on the weekly chart, it's the same concept, guys. This thing is in a symmetrical triangular pattern, which has the ability to break down, and it also has the ability to break to the upside. But based on the structure of price action, price is really holding closer to the resistance of the triangular pattern, which tells us that it's just waiting to build enough momentum to break out to the upside and run higher. All right, where can it go? First level is going to be the last high, and if it breaks above the last high, then there's a probability that price can continue to move higher. So when I look at XPEV and I look at NEO, I'm seeing where there's a greater risk reward ratio on these two in terms of the potential move. Right now, let me show you the stock that has played this very pattern out clearly and why I believe that this is coming for these stocks as well. All right, Tesla. When we look at Tesla, price run up weekly chart, and here this thing had run into a very tight wedge or a pattern or a triangular pattern, and this thing has broken out, approaching to test back its all-time high. If we switch this over to a daily chart, we can see here is the triangular pattern, guys, and it is gradually moving in a small trend heading back to its all-time high. So for this reason, I'm super optimistic about XPEV, and I'm also excited about NEO. I like the levels that prices are at right now in terms of risk reward ratio. I think that this is a good place for me to exercise a trade looking at the probabilities. All right, so guys, if you did find some value in this video, please hit that thumbs up, subscribe to the channel, and I look forward to seeing you in my next video.